Okay, so long story short, I have been off process in October and I have blown the 50K account due to greed. So let's extrapolate and see how that happened. How did we get into the position this month that greed has destroyed the 50K account? That's the most important question that we have to respond in this video. And so starting with it, we have to remind ourselves how we got into this strong, long compounded Ethereum position at the end of September, where obviously there were a lot of compounds that I did going into October, which wasn't necessarily bad, but the most important thing to keep in mind is that training the stop losses properly on the compounded moves was probably a good thing to do. But at the same time, the more that the Ethereum long position got into the profit, there is obviously the possibility that the more profits you have, the higher the risk is. Obviously, open profit is usually not seen as added to the initial risk, but in my opinion, if you think about it, the more profit you have, the more you risk, because basically, besides the fact that your initial position is going up to the fact that you're buying while the price is moving up, you can also lose the open profit, which would mean that the risk itself is going higher. Now, I think that everything until the fifth compound was pretty good here, but if I remember correctly, what happened at this point at the top of the move is that there was a very, very high for the whole range of the move up for Ethereum, and so I was actually waiting for around 4.85k if I remember correctly. And the moment that it started moving down, I just said that at that point I would expect it to move back up to take the liquidity around 4.9 and touch the very, very high. Now, this is not necessarily a bad move by me by compounding more on the move down here, because we're still in pretty big profits. But obviously, for whoever is trading crypto, you might have remembered the day of the 10th of October where everything went down drastically and very fast. Now, in a normal proper month, I could have probably had the time to just close the trade at some better price, but at the same time, something like this just happens sometimes, right? I think that what I did bad here and where I got greedy is that I was waiting for literally 100 to 150 dollars move on Ethereum, and I think this is something that is very bad to do when you have already a very big move up. So for example, the first trade itself was around $3,850 for Ethereum, right? And the moment that it moves to 4.7k and I don't close the position, you're basically giving up a 90% move. Let's just think about it as a 100% move until 4.85, right? Which obviously isn't, but let's just think about it this way. So you're giving up a 90% move with compounds that it's in extreme profits for a 10%, for literally for waiting for 10% more. This, in my opinion, is classed as greed. You can just say, okay, this is enough. It's fine. It won't touch my level, and we just move to the next trade, right? So, in my opinion, this is a big greedy move for marginal gain. This has to be resolved or has to be kept into memory, just so next time, or maybe this month, or starting with this month, which is November, this doesn't happen again. So it's something to take back home. Where why would you give up 90% for 10%? Since risk is volatile, right? Risk it's not a static risk. It's never a static risk. So this was the second trade of October that ranged from the big drop from the big drop to like 20 of October. That added tremendously to the psychological snowball. It was a short trade on Ethereum that started from around 4.1k to 4.4. with 3 compounds, right? I was eyeing to the to this wick here being taken out with this move down. So unfortunately, I had a lot of quota on this trade, on this short trade. I had 3 compounds on an initial Ethereum short, obviously trailing my stop loss properly. And objectively, if we're looking at these weeks here that happened after we didn't take this week here from the short trade, it's not even a big move to the upside. Now the problem lies in the fact that the trade itself is heavily compounded, and the trade is way bigger than you would like it to be if it were to go up again. So at this point, this trade ended up in a break even. The problem here is that having already been triggered psychologically from the first Ethereum trade that was in very big profits, and it was closed on almost nothing or even a minus, then you are ending up in this new Ethereum trade that was also profitable, obviously not as profitable as the first one, but it also ended up in nothing. So at this point, you have to think about this. Do you care about your idea and your bias of it going lower and taking either the big week that happened on the 10th of October or this second one that was a small retest? Or do you care about just dialing it back and saying, okay, I will take this profit. My job is to actually generate money from the market and not to be right. So this is something to keep in mind. Sometimes greed shows up in different ways. So this is the first Bitcoin trade of October that started from the big drop from the 10th of October to around 20. It was also paired with the second Ethereum short. As we can see at the end of the week here, the Bitcoin chart is already way weaker compared to the Ethereum one. The Ethereum barely took any lows, while Bitcoin was closing in on taking the overall low from the 10th of October. At this point, initial trade was ranging from 114k, and it was with the stop loss at 117.5, which wasn't taken out with this aggressive move to the upside. Then the first compound came in at these lows with the compound 2 shortly after. Compound 3 came after the bigger drop. So at this point, this is something that it was comparable mistake with the Ethereum trade. At this point, I really wanted the low to be taken here. I think that my bias was a bit too much, and I didn't think about the open position and the open profit again. So at this point, I'm doing the exact same mistake on greed that I did at the first Ethereum trade that I was explaining. So basically, this was a 90% open profit given up for a 10% potential profit. This was extremely bad, once more, and it's a greedy trade. I think taking the profits here, or at least when this consolidation happened at around 106k, was going to be appropriate. At this point, I'm just bleeding out profits, and the problem is that we are having bigger move to the upside at this point. Obviously, we did come back and and we took this low from 10th of October at the start of November, and this is going to be the last trade that actually kind of killed the account, where these two 98 to 99k moves here, this was something that it was very choppy, right? So at this point, I had some longs from this drop under the 100k zone. The big problem here is that I was compounding aggressively towards this 104k zone. Unfortunately, it just happened that overnight we got a big move down that almost took out the lows, and so I think, if I remember correctly here, I had around 2k in profits, which I did not take because I noticed that there was a nice move up and I expected some continuation. So I think the biggest problem this month was the fact that there was a lot of snowball on the psychological side ever since the trade on Ethereum that I have lost at the start of October and moving towards the middle of October with the 2 Ethereum and Bitcoin shorts that were also in good profits, and greed gated me from taking the profits that I had open. So at this point, this trade at 98, 99k just put the nail on the coffin rather than doing anything at all. And so this is how the 50k account got blown, just because after this trade failed, actually this trade ended up in a loss. So from 2k profit, I actually went to like 1.7k loss, which is a big loss. It's around 3%, which is way more than I would like. My risk is around 1% all the time, 1.5%, 2% to the maximum if it's a big compounded trade, but this trade was compounded way too aggressively for no reason. So at this point, you don't need many trades of 1% lost in order to lose the account. So if you have like 2k lost or 1.7k lost and you're like at 50.5k on your account, you will notice that even if it's a random output of trades, you can easily get three trades in a row that are just ending up in a 1% loss. And so this is something that I have to take home, where I need my battle for greed to be properly set. And I think that fear is not a problem for me, but greed sometimes gets in the way of profits. This is it for the October review, and unfortunately the 50k is blown, but there will be another one shortly where I will explain the trades for November with another 50k account, and hopefully this one will go better and the greed doesn't get in the way.